Hey everyone, welcome to the Watto Business Podcast where we talk to founders and creators and hear their stories. Today we've got a very special guest with us. Amir Tarighat is the CEO and co-founder of Agency. He's a third-time founder, engineer, and an active angel investor. He has over 10 years of experience building technology in both the enterprise and the startup space. He is also a leading cybersecurity expert who has been interviewed and featured in Forbes, Fortune, ABC News, the Sands Institute, and other organizations, other publications. He is also an advisor for the Krach Institute for Technology Diplomacy at Purdue University. Amir, thank you so much for joining me today.
Thanks so much for having me.
So we'll talk about agency, but I would love to hear where your story started. Where did you grow up?
I was actually born and raised in Los Angeles, California, so Southern California. My parents are from Iran, so they immigrated here before I was born, and yeah.
And what did your parents do when they were in Iran? What did they do when they came to America?
My mom was kind of like a stay-at-home mom. My dad had more of a academic background in psychology and all of that, but uh, didn't do any of that in the U.S. He was an entrepreneur. He owned some small businesses. He actually owned a car dealership with my uncle for a long time.
Oh, so entrepreneurship was kind of in your blood, or your dad happened to start a business when he came to the US, maybe out of.
Yeah, I think entrepreneurship in a way was in my blood. A lot of my family members, like uncles and stuff, own businesses, traditional, small businesses. So I grew up around a lot of different businesses. I got to drive a car when I was 12 years old at the car dealership, so it was fun.
Cool. Um, and then were you always interested in business? Were you always interested in entrepreneurship or starting something of your own?
I think I was. I was always interested in making money and building a company. I was always interested in business. I almost launched a startup several times. I think you and I were talking about it before. When I was in like high school, I had a used car that I would like, drive and then sell it and buy another one and kind of flip it every 3 to 6 months. So there was always an element of kind of.
Did your dad or your uncles push you into the startup space, or how
Not
did
at
they
all.
play a role?
Actually, they strongly encouraged me away from entrepreneurship just because I think they had such a hard time with it and so many struggles that my dad had running a small business. He wanted something else for me. They definitely encouraged me to have a more traditional path, like, be a doctor, be a lawyer, something like that. But no, I was always interested in building a company.
And where did you go to school when you were in? Did you go to school in California, or did you?
Yeah, so I went to public school my whole life in California, and then I went to Harvard for undergrad, and then later on I did a program at Stanford in computer security.
What did you study at Harvard?
I did a liberal arts degree, so I kind of touched on everything, but computer science was my focus.
Cool.
Yeah.
Were you always interested in technology as well? Or was the startup that you were going to maybe found going to be something in the tech space, or did you want to get into a legacy business?
No, I think I always wanted to be in high tech companies and build technology and build that kind of company. I did after my first startup break away from that for a few years, uh, but I think that gave me a great set of experiences that I applied to my company now.
When did you start your first company?
I started my first company a few months before the end of my senior year in college with two friends from college. Um, it was a really crazy roller coaster ride. I think we raised $1.5 million before we graduated, actually, and moved to New York to build that company. Um,
What was the company? What was the nature of the business?
yeah, so the company was called Rhythm, and it was a trading platform and system for designing automated trading strategies for non-quantitative, non-technical people. So it was a visual programming language. They could test strategies, and then they could run them and execute trades with their brokers through our cloud. And our customers range from like really sophisticated professional, like on their own day traders who are not part of like a giant hedge fund, and then like very small boutique, financial trading firms and hedge funds that didn't have their own, quantitative traders or programmers to design their strategies.
Where did this idea come from? How did you find that there was a problem in this area that you
Yeah,
could
so
solve?
so this was like decided to build this company because it was a space that none of us had experience in, which maybe is not the best thing to do right out of college, but we had a lot of interest in it. And this was like, I don't know, like a year before like that book came out, Flash Traders, and a lot of the
Flash Boys are.
Flash Boys,
Yeah.
right? And then there was like the was starting to become popular, but like we started that company like a year or two before all of that. It was a space we were interested in learning about, but we didn't have experience in it. We kind of like got a crash course immediately about it. But we had in principle a good idea, that was hard to build. That was like one of the biggest problems with it. But there's still companies now, 12, 13 years later, trying to do the exact same thing.
Interesting. And then were you, what role did you play? You were one of the two or one of the
Yeah,
three
so
original founders?
I was the original founder. It was my idea. I had this idea for applying. There's a programming language called Scratch, which was developed at the MIT Media Lab, and it's a really simplified programming language designed to teach small, like kindergartners,
Hmm.
how to program. And so it's super easy. It's like intuitive. Like you move something around and it like makes like a little cartoon character walk around. And I was like, we could use this same design principle to design a trading platform. Like moving these pieces around could design the strategy. So like each piece of the puzzle kind of that you'd snap together could be like the technical indicators, or this is what stocks I want to look at, and if this happens, do that. If this doesn't happen, do another thing. And so that was the original idea for this. And
Because rather than,
writing code.
well, no, if, right, so traders would either have to create their own solution or use Excel or write code in Excel or,
Well, actually, what traders would have to do instead is like think about like if this stock is good and hit buy or sell. The larger firms had programmers and quantitative researchers and tools to design automated strategies. But if you're like a retail day trader, you don't have anything. And so the idea was to map kind of like the intuition, the strategy of like when this happens, I do that, and blah blah blah, and automate it, and use more sophisticated strategies and statistical strategies and that sort of thing. But really, it was to be able to programmatically do these things that a trader's intuition would do. So instead of you as an individual maybe can look at like 3 or 4 stocks, which would be like a lot. But maybe you could build a program that could do that across every stock and mirror what you would be doing. So, things like that. But that company suffered from all of the first time founder mistakes. Like we were in a market that was too difficult for people without experience who were outsiders. We were young kids. We had all sorts of technical problems. Like, I was in over my head as a CEO as far as like building it out. Took longer than expected. We weren't generating revenue for nearly 2 years, but all these, first time founder mistakes, we did them all.
and when you say first time founder mistakes, I mean, there are things that you naturally would struggle with because you're a first time founder. You maybe don't have a ton of experience leading a team, building a
Totally.
solution. Then were there other things like doing market research, finding product market fit? Because you were able to convince investors to believe
Yeah,
in you. Yeah.
we raised a good amount of money with that company. I think like 7.5 million in total was raised. Um, no, I mean like so there's different kinds of mistakes that like people make when you're building a business. Like there's mistakes that are like, I've never done this before, I'm young, I don't have experience, right? That's one thing. First time founder mistakes are, to me, a different category of mistakes. Like there are things that are unintuitive that a smart person can make. Like you're a smart person and you think it's a good idea to go left, but going left always ends badly. And so places like Y Combinator or like investors and whatever attempt to teach people. And we did Y Combinator for agency, and it was one of the best experiences ever. I can't imagine what my first company would have been like if we had somebody like that telling us. But it's like I sympathize with first time founders because these are the types of mistakes where, and I see it with like the companies I invest in. I can tell somebody the answer to the question, like this is for sure the right answer, and this way is for sure bad. But I know that because they're a first time founder, they're not going to be able to listen to me. They have to like fail at this and then pivot to doing it the right way. And the people who are fortunate make those mistakes quickly and in a way they can recover from.
If you were able to go back in time, or if someone were, did you get advice that maybe you would give first-time founders, and did you discard it, or did you?
It
Well,
was a mix. So like there was definitely some people giving us some advice. It was not to the level of, let's say, like a Y Combinator would give advice or like a Y Combinator group partner would be giving. Some of the advice was bad advice, and we listened to some of it and some of it we didn't listen to. But you know, there were more like structural mistakes in like stuff that's hard to recover from, like the dynamic I had with my co-founders versus the one I have now.
interesting. So there were personal issues, leadership issues, first-time founder issues. What ended
Lack
up?
of experience
Yeah, and
issues.
just general like lack of
Yeah.
experience issues. So what ended up happening with that company? How many customers did you have at your when at the peak of that company?
I don't remember because I left right before the company got sold off. Um, there were like thousands of people who were using it in some capacity. Like we had lots of users that didn't even use it to trade. They used it for research purposes.
Just
Like,
for
yeah,
the analysis.
exactly.
So you ended up selling that company,
And
and
I mean, when I left that company, when that company was done and got sold off, it was not a good outcome. Like we, I left saying like I never want to do that again. I never want to start a company again. It took me months to like mentally recover from like the roller coaster ride of the ups and downs because you have extreme highs and lows building a company like that.
it was this is 7 years of your life that you
Close to
spent on this
close to
company, on
7 years,
Wisdom.
yeah.
So you sold this company. Did you end up tremendously rich?
No, not at all. No, no. I didn't make, I think, very much money at all from that. And I decided, I was like, I never want to do that again. And I want to just make money immediately. Because part of the reason we didn't make money and like it was a mistake, first time founder mistake, is we weren't chasing sales. We were really focused on product. We were really, thinking about like long term what this product could do or could mean instead of like thinking about making money from the day one before the product was even out. And so what I wanted to do was I didn't want to go like work at a big company. I still wanted to be an entrepreneur. I just didn't want to follow what I thought back then was like the startup model, which was like not make money for a long time, which is actually another like first time founder mistake that they think that it's supposed to take a long time to like find product market fit or take a long time to get customers or get money. So I started doing more like traditional profitable businesses, bootstrapped. I built a consulting business where I was doing technical consulting for all different kinds of companies and startups. Some of that related to like security and software development. um, I also built like a real estate investment and management business, particularly focused around short-term rentals. Um, and I built a few other companies, and it gave me the ability to start investing in startups. So I never really like got out of the startup world, and I always knew that I was going to do another kind of like venture scale company, but I think the experience and the desire to make money like as an adult, uh, made me more selective. Like I wasn't just gonna start a company because I felt like it. Like I mean, I think in my Y Combinator interview, I think I said, like, I didn't think I was going to do another startup. I was, only going to do this because I have to.
Huh. So, so you felt, so that's where agency came about.
Yeah.
So there was a strong enough, a compelling enough reason for you to start this new company. Where did the idea for agency? First of all, what is agency for
Yeah.
those of us that don't know?
So agency kind of has two businesses. Our primary product is what I call employee targeted digital risk. So we make a personal security subscription. It includes software for devices, managed security, insurance, identity theft coverage, dark web monitoring, basically everything that a security team would be doing for a large enterprise, but we do that for individuals. And we sell that product to companies primarily. I mean, individuals can buy it on our website, and about 10% of our business is direct to consumer, but 90% of it is selling it to companies who buy it to protect their employees for various reasons. The other thing that agency does is that we have a managed security and compliance practice that got built off of our B2B sales, which was that a lot of the companies that we were servicing needed help, and we had internally much better and more sophisticated security experience where we started helping them designing their applications, doing secure software development lifecycle practices, and that sort of thing.
Interesting. So if I'm an individual, I can
Yeah,
go to your website, go to getagency.com and sign up for a subscription, and then my laptop, all my personal devices
yeah,
are protected against cyber threats. It's a cybersecurity solution.
exactly. And so it's not just your devices. Devices are one part of your digital life. It's also your online accounts. It's also your passwords. It's also information about you. So like there's lots of sites that sell public records information, like your email address, who your roommate was 10 years ago, your date of birth. That information, along with stuff that gets breached on the dark web, is what's used to compromise your identity on your work, in your personal life. Those spam messages and phishing messages you get, that's where they're getting the information from to write emails about you and send it to people you know.
So it's an all-encompassing solution, but there's also, how do you get corporations to pay for it? Is it like an employee benefit where when a company has an employee benefit program, they can spend that money on agency, or how
Yeah,
does that
that's a
work?
great question. So that's one of the commonly misunderstood things about our company is that it isn't a employee benefit. It is positioned as an employee benefit, but primarily our customers are buying it as part of their security budget, and they buy it because there is a security need. And it's typically something like individuals are the primary threat surface for their company. So that could be managing directors at a law firm or sorry, a financial firm, or it could be attorneys at a law firm, or journalists at a media organization, athletes, that sort of thing. Or it could be companies where individuals are accessing sensitive data on BYOD devices, and they have to follow some sort of regulated, ISO 27001, HIPAA, that sort of thing. And in Europe, actually, we get a lot of customers because because of GDPR, you're not supposed to install company security software on people's personal devices. So we actually get around that by providing the security as a benefit. So they own it. The company doesn't get any of the data, and that's the important
That's
part.
interesting because typically you work for a large company or any size company
Yeah,
that is serious about cybersecurity. You'll install what's called MDM software.
right.
So the company kind of has access
To wipe your
to
phone.
everything on your phone. And
Right.
if it's your personal phone that you're using, that's annoying to some people. That's why a lot of people have two phones, a company one and
Yeah.
a personal one.
Yeah, that's exactly right. So people don't like that experience. They don't want their company to have access to their personal information. And it also creates this kind of bad dynamic where if something actually bad happens, the only person they have to talk to is the security teams within their company. And people don't want to look bad. People don't want to look stupid. They don't want to say, I clicked on this link. But when you have a third party and they understand that we're here to service them, their company doesn't have access to any of this security data. They're more comfortable to talk to us. I mean, one of the CISOs that is our customer, like he literally said, he's like, I'm afraid my employees are not telling me what's going on when something bad happens on their personal devices. Like we could have people, accessing data on their personal computers at home, and if they get malware, like they're never going to come tell our security team.
But agency solves that problem by being that third party.
Exactly.
And then also there's an analytics component, right? So if 5 individuals who work at a particular company are hit with some sort of phishing attack, the company itself will also benefit because you're
That's right.
analyzing and
So we have a product called Breach Signal, which is a threat intelligence feed. So we take all of the information, all the threat intelligence and security detections on the company device, employee devices of that company. We anonymize that, and then we give those signals back to the security team, and we can actually give it to them in any format they want. They can connect it back to their SIM, and it'll just be anonymized. So imagine 40 people report a phishing email on their personal email addresses, or there's a certain malware that's being targeted or website that's being detected on multiple people's smartphones at this company, would indicate some sort of coordinated attack or phishing or something like that. The security team would be notified in that threat intelligence feed, and they could take action. They might want to send a company-wide email just saying like, hey, if you see this, don't click it, that sort of thing.
and when did you, after you got the idea for agency, what then did you do? Did you raise funds immediately? Did you start building the product? Did you do some market research?
Yeah, so I got the original idea for agency almost a year before I started the company. And when I did eventually start the company, um, I really focused on building like the alpha product first and talking to people and literally just finished building the product. So I think in about 9 months, I had a fully fledged, product put together
Did you
that
make it
people were using.
yourself, or did you outsource that work, or did you
No,
do you have
no,
a partner?
my wife and I built it together
Oh, wow.
mostly. Of course, like, the hack to launch is like you use certain tools and things that other people made. Like there was no point in like building an antivirus or EDR sensor from scratch. I
Yeah,
used one
it's
off the
already
shelf.
there. So
Right.
did you use a bunch of open source tools and APIs to connect, or?
I use paid tools. I use open source tools. I changed the tools several times. I tested it with a bunch of people, to see what people were comfortable with, where the interest was, and that that whole process went pretty slowly, and that was like 9 months of really slow, kind of like product R&D. That was just the two of us doing it.
Did you exclusively work on this initial MVP for agency
No,
during that 9 month stint, or was this something you did on nights and weekends?
it was something I was doing. It was more than nights and weekends. But it wasn't my full time job. It was like I was doing it part time,
Hmm.
and kind of like figuring out, kind of like, is there something here? And then, by the time I got my co-founder to join, we'd known each other for years. We'd been talking about it. He kind of like saw the progress throughout. He was testing it out, but he was my co-founder yet.
At what point did you get your co-founder involved, just to do the testing and to tell him about the?
So he, I knew him for a long time, Tyler, and he was involved in the security space. He had previously had a company in the security space, and I wanted him involved in the company. Like I was gonna have him like be like an advisor or whatever. He followed along. He was one of the people who was testing it, and then kind of it worked out perfectly because I wasn't even sure I wanted a co-founder, to be honest. Now I'm 100% glad that I do have one, and I highly recommend that people should have one. But so I was kind of like tinkering and like testing, and then it just made perfect timing. So he joined. I think he joined like 9 months, like right around when the product was ready. Like was when he joined, and then we again totally bootstrapped, totally like didn't raise any money. Wasn't thinking about raising money. I was already selling it. Like even this alpha version, I was like selling it here and there for like $9 a month or $20 a month or whatever.
Hmm.
And started like
Did
this.
you have customers when you launched
Yeah,
your MVP?
absolutely. I mean, that was the goal, right? Like the MVP was to go get customers. I mean, I didn't have like thousands of customers, but I had dozens of customers, like when my co-founder joined. And then that was slowly like growing, and we were kind of like, there was a path for us to be like a very consumer company, like a Norton antivirus type company, and to be like a B2B company. We made the decision to lean towards B2B, which was, I think, the right decision. And so like we started thinking about like getting business customers. We applied to Y Combinator and we got in. That was kind of a big turning point for us. Um, that was an incredible experience. Uh, and we almost didn't go to Y Combinator because around that time we decided we were going to raise money.
You decided you were not going to raise money.
So we decided we were going to raise money about a year in. So like a few months after we launched that MVP, um, and we had a bunch of offers
Really?
to.
So from existing investors, you already had some offers on the table.
Not we had no investors at that point. It was bootstrap, but we had a bunch of offers from investors. And then before we took that money, we got into Y Combinator, and we decided to, which was a very difficult decision, been the best decision I've ever made. We decided not to take the money. We decided to do Y Combinator instead.
Interesting. Is it because I've watched all of Y Combinator's
Yeah.
videos. I'm a huge fan.
Uh-huh.
And I worked at Stripe, like partly because I was like, oh, I get
Yeah.
to work for this YC company.
Yeah.
But they have a really regimented system that they share. Right? Is that what was a benefit for you? Was it the network? Was it um, the knowledge that they impart in you? Was it the funding that they give to you?
So I always start whenever people ask me about why Y Combinator was so good and whatever. I always have to start by saying the thing that what I think everybody assumes is that it's about funding or fundraising. Like that wasn't why we did it, and I think that it's a good like a lot of people do it because they think it's going to make fundraising easier. It is going to make fundraising easier. That is not the best reason to do it. We could have raised money. We could have, maybe the valuation would have been slightly lower if we didn't do Y Combinator, but like the fundraising wasn't why we did it. We did it because honestly we were looking at it as like insurance. Like we we're second and third time founders. We had had roller coaster rides with mild success, like not zero success, but some success. And we were doing this to build a good company the right way. We wanted to do everything right. And we were like, let's do this with help from people who know, clearly the experts, and like, let's build this the right way. Let's not like bullshit ourselves for like 5 years and not have a good result. So that was the reason we did it. And we were there to listen, and we followed all the advice that applied to us as best we could. Like we didn't go there, we went there with an empty cup, like to learn, you know what I mean? And um, it's funny because I see a lot of like first time founders who are like our batch mates, and it's like we knew what to listen to. We knew the stuff that was like, this is advice that we need to listen to, and like we immediately listened to it. So yeah, they really help a lot with having advice and building this model of like what a high growth company should be like, holding you accountable. And the group of people there, like the other founders, are amazing. Like it's not just like, oh, it's like people you can work with or people you can sell your product to or any of those things, but it's like you think about any element of your company, engineering, marketing, sales, whatever, there are people in Y Combinator, other companies dealing with those same problems, and there is like this institutional knowledge in real time of like, what else are you guys saying? What's your cost per acquisition for this? And it's like, oh, you can benchmark yourself. Like we're doing worse than these people, but we're doing better than those people, and this is what we should be doing. And so that sort of stuff you can't really get anywhere else. You can't get that advice from somebody who did it 3 months ago, let alone 3 years ago. It has to be now, real time kind of information.
So there was community aspect, and of course the advice that you got from
Yes.
going through Y Combinator's programs. What sort of changes did you make to your MVP while you were there, or what, were you just kind of tweaking little by little to improve the product and improve the company?
We made some minor tweaks to the product and how it was. We made a lot of changes to like how it's positioned, how it's sold, who we were selling to.
Because you were going to go into the B2B space.
Yes. The big kind of breakthrough that we had was like originally, I had this. I think you'll find this interesting because you have a background in sales and cybersecurity. I thought at the very beginning of the company that small businesses would be amazing customers to sell to because what I'm offering them is like enterprise grade security that's so expensive, but it's like really cheap here because it's like personal. And I was like, there's nothing else this small company with like 50 people can buy for $20 a month that touches the value of what I'm providing. Like they would have to spend thousands of dollars to get this $20 product. And I got a bunch of small businesses to sign up. And they were like kind of crappy customers and like it was hard to sell to them. And I realized like they don't spend money on security because they don't want it. Like
They don't, maybe they don't value it, or they don't know what sort of threats
right.
exist. They're not familiar
If
with the
I'm giving them
space.
something that's like $1,000 of value for $20, but they don't even want that $1,000 of value, the $20 is $20 they don't want to spend. Like there's a reason these companies don't need these things. And so again, we got customers, but it was pushing the boulder up the hill. It wasn't pushing it down the hill. And one of our investors, um,
Oh, real quick, can you move
yeah,
your mic out? There you go.
yeah,
Perfect. Yeah.
one of our investors, uh, and he's been one of the most incredible kind of investors in the company. He's helped so much. Vivek Sodera, you met him,
Yeah.
one of the co-founder of Superhuman. Um, he kind of encouraged me, and he was like, "Just try to sell to bigger, sell to enterprise." And the truth is, like, I was scared because the way that I thought about it was like, it's going to be harder, they're going to be slower, like it's going to be worse than even these small businesses. And he encouraged me to go after bigger companies. And it ended up being easier to sell to bigger companies.
Really?
And so that was a real turning point where we really like shifted into like we need to do B2B enterprise sales, mid-market sales.
Because enterprise companies just value cybersecurity so much.
Exactly.
They've been through a few breaches, they've had a few incidents, they know how important it is to close business. You need to have those solutions in place.
Well, they want to talk about it regardless. Like if you have a product that's interesting or different, they would like to know what it is and how it works and why they might need it one day. So the company that has exceptional security wants to remain being the company with exceptional security rather than the companies that are like, how do we reduce our cost to zero? How do we spend the least as possible? That's how we make money. So that was a big thing that we learned during Y Combinator, and that was part of this like experimental kind of energy that you have through YC, where you're like actually focused on figuring out what's going to move it, but also high pressure. Like you're not spending like 3 months figuring that out. It's like, what are you going to figure out this week? What are you going to figure out next week? And it's like, are you doing things that are actually moving the needle?
Interesting. So you decided to pivot to the B2B space. You met some you met some great mentors. Um, After leaving YC, did you raise additional funds? Did you grow your sales team?
Yeah, so um, we closed our seed round at the end of YC, like we closed it by demo day. We got offers to raise a lot more money. We got kind of offers to do a Series A at the end of YC, and we decided not to do it because we raised a pretty big seed round, and we were like, more money is not going to move the needle. Like we need to actually just go out now and execute. So from a sales perspective, as you know, my co-founder and I are students of sales, and we enjoy doing sales, and we embrace that That's part of our culture. And so we do pretty much all of the higher end, bigger ticket, high ACV sales. The customers are dealing with me and my co-founder through the entire process. We kind of knew that we could do it because we'd both done sales before. And so we kind of built the sales program around ourselves. So our first sales hires were really BDRs to work under us as if we were like AEs. And so we have, I think now we have 3 BDRs in the company that really just work under my co-founder and I. And we have one AE and he has his own BDR, who is fully on our Agency for Startups program, which we're expanding now globally to Latin America and Europe to have their own dedicated teams. But he's running the startups program all by himself. So that just happened in the last year.
How old is the company?
The company is about 3 years old now, a little bit less than 2.5 years old.
And how many employees do you currently have?
If you include part-timers, it's close to like 14.
14 employees. And how many paying customers do you have?
That's a hard question because we count customers in terms of end users as well as like companies.
Mm-hmm.
So it's hundreds of companies and thousands of end users.
And you have a per user, per license business model, right? Everyone pays like a monthly fee.
Yeah, so we have a couple of different ways the product is sold. So the standard product is a per user or per device fee that starts from $20 a month. So a user can have 3 devices or 1 device if their company's buying it for them. They can also use it on their company devices. If the company doesn't have like workstations, we can deploy it to those devices. And a lot of our customers do use that as well. And then we have our like kind of managed security and compliance services that start around 2,500 per month, but we have companies paying close to 8 to 10,000 as well.
Depending on the size of the company
Exactly.
and how many users there are and the type of traffic.
Exactly, and that's a monthly, month to month.
Are you comfortable sharing your annual or your monthly revenue numbers?
Not really, but I can tell you that we're beyond the kind of like Series A traditional metrics for growth.
And what are some of the challenges that you are now facing?
So we've had exceptional growth in the last like 4 months now, and I think we've like 4x'd our revenue this year. So right now our biggest problem is hiring. You know, exceptional entry level talent. So to do things like onboardings, customer service, some of the security operations and compliance work that we do for our clients, getting in, people who are early career where we can train them, teach them our processes and best practices and have them implement. So we're hiring, we hired 2 new people for that just this month. So that's the biggest thing. We're now in the opposite side of the scale problem, like, shifting from sales is working, properly to kind of like meeting output.
Would you say that your experience with your first company was necessary in you building agency, or could you have done it regardless?
Unfortunately, it absolutely was necessary, and that's there's no other way around it. Yeah, it definitely made me a better founder, a more formidable founder. It taught me a bunch of life lessons, unfortunately, the struggle. And I think it actually helped me with my successful businesses before agency as well. Like without that experience, I wouldn't have gone on to build those companies.
So what's next for agency?
What's next for agency is expanding our startups program and managed security offerings to Latin America and Europe formally. We now have a bunch of customers there, but we don't have like an actual team that's selling there. As far as our ETDR product, we're looking at a lot of the frameworks. So right now, companies are buying it.
ETDR.
Employee targeted digital risk, so like the personal security for companies product. Um, where companies are buying it because they know they have this problem. Typically, companies spend money on security for compliance reasons, so like a framework that tells them. And what we're seeing is more and more of these frameworks are getting focused on kind of like BYOD security and personal security. So I think what will happen and what we're involved in is like bringing attention to this huge threat surface. And I think what will happen is these frameworks like ISO 27001 and SOC 2 kind of best practices will involve some kind of personal security. And we're going to, be there to meet that need.
Awesome. How can people learn more about agency?
You can visit us on our website at getgtagency.com. That's the best way. Yeah.
Awesome. Well, Amir, thank you so much for joining me today. I really appreciate your time. And folks at home, thank you so much for joining us as well.
Thanks so much for having me, Riz.